Hello, hello, Miami. Bienvenido, seja bem-vindo a tudo. It's so good to be here. Thank you all for having us. My name is Vinayak and I head up gaming investments for Fundamental Labs, and we have a wonderful cast of panelists here whose names speak for themselves. So we are so excited to be here and talk to you all about gaming and how Web3 and the Metaverse and such will impact our future moving forward. So let's jump right into things. Jeremy, you have an amazing platform at Xterio. Tell us the story about Xterio and what made you spin off Xterio from FunPlus.
Hey, so first, I'm really humbled to be here. Thank you for having me. So we founded Xterio right about a year ago, and it was to focus on two issues. We all come from gaming. I've been in gaming for 15 years. And the first issue was IDFA deprecation. I think everybody knows here that mobile gaming and free-to-play took a massive hit. We're now fishing with a broad net and not with a harpoon. And the second problem was just the natural shift we've seen to digital ownership. And we realized this moment in time is very close to the one we've seen in free-to-play, where it's a very immature tech stack. There's very poor data tracking, targeting, analysis of your consumers. And based on that, we've decided to really focus on building an incredible tech stack that is going to deliver value to developers that want to enter the Web3 space. So we raised more than $40 million and creating, essentially, I like to call it the play fab of Web3. Is how do we get a comprehensive and all-inclusive tech to our partners and friends in the game industry.
Awesome, thank you for that. I think something that I want to highlight here is that there are 3 billion gamers on the planet. That's nearly half the world's population. So David, tell us, there's no such thing as a recession-proof industry. Every industry gets hit during a recession. But what do you think about gaming being a recession-resilient industry, and how should investors view that, and how is Ready Games viewing that?
Well, first of all, thank you for inviting me up here. It's great to be here in Fundamental Labs as well, for all your support. So gaming is, along with other entertainment categories, famously known as something that is recession-resistant. Consumer spending, people will continue to spend money on things they find pleasurable and entertaining. And so while their income might go down, while they might be constrained in other areas of their life, they'll continue to choose to do things like watch movies, play video games. And so as an asset class or a category in an industry, gaming tends to be somewhat recession-proof, you might say. So in our case, although I'm not sure we're actually in a recession right now, just to be clear, but having said that, we are not too concerned. From our perspective, we're helping game studios, mostly on mobile, enter Web3. So our customer set is existing mobile game studios who want to bring their games on chain and essentially make more money by doing that. That's what happens. They make 2 to 3 times more money when the players can become the legal owner of their assets, et cetera. So from their perspective, this economic climate is perfectly great time to continue releasing games. People are playing them, spending money on them. So it doesn't distract us at all. And I think in general, for investors, it's a great asset class to be exposed to because of its resilience. It's not subject necessarily to the same, it doesn't really follow the same economic trends the way other categories might.
Right, because entertainment and escapism are necessities, especially in hard times. During the last recession of 2008, The Dark Knight ended up making $1 billion. Grand Theft Auto 4 sold $700 million in 24 hours. So we've seen signs of this, and I think that gaming is kind of proving that point.
And then when you combine gaming with the phone, like the last thing someone is going to give up, honestly, you see people who literally don't have homes, but they have phones, right? And it makes sense because the phone is the thing that allows you to continue to get things done in your life. And of course, people spend most of the time on their phone playing games. So, literally everyone's exposed to games if they have a phone, which is pretty much everybody. And that's pretty cool, I guess.
Totally, totally. All right, Urvit, so you've worked at Amazon Gaming and now at Polygon. Talk to us about the shift from going from a Web 2 platform into Web 3, and how should developers and investors work with platforms such as Polygon?
Yeah, thank you for having me. It's something that I think about a lot as you think about making that transition from Web 2 to Web 3, and being at Amazon for 10 years and helping build a lot of the platforms at Amazon. You start thinking about what does it take to actually build a platform and then have developers building on there and then great experiences that go to consumers. And in Web 2, historically, it's been own as much of the stack as possible. So when I was at Amazon, we would build the tools needed for developers versus partnering with others because, as a Web 2 platform, you're able to extract more value from whether it's consumers or developers. In Web 3, that's flipped on its head. So at Polygon, right, the way I think about it is, we want developers to be building on Polygon. We want great games to be built on top of Polygon. But that's the output. How do we get there? And there's a lot of tooling, as Jeremy mentioned, right, with Xterio's building and others. They're building the tooling, and a lot of folks are building the tooling that's needed to get those end consumer experiences out to market. And so the focus for us right now is really, hey, how do we make sure the tooling exists and is being built within the Polygon ecosystem from many, variety of third parties? And then how do we bring it all together so when developers want to come and build a great consumer-facing experience, they can get to market a lot faster, right? And we, for those, that have spent time, consuming, products on chain, right? It's not a great experience today, and a lot of that has to do with the lack of tooling. So that's how we think about it at Polygon.
Got it. And I want to expand on that, right? Because how should investors, and Jeremy, I'd like you to add in on this after, how should investors work with platforms like Polygon, and how should investors work with developers that build on Polygon?
Yeah, I think there's a couple ways for investors to work either directly with Polygon or at least with the tooling providers that are supporting chains like Polygon, right? And so as I think about the tools that are being built in Web3, I think most of those the successful ones will be cross-chain, right? So it's less about focusing on a single chain, but figuring out, hey, is this a need in the market that will solve X, and then can the team actually deliver on this cross-chain? Because at the end of the day, we will be in a multi-chain world. And then from specific, developers that are in the ecosystem, it's, finding those developers that are building, I think, more than just the consumer experience, right? It's the first to market will also build tools to get to market and have the opportunity to externalize those for other developers. So it de-risks the investment a little bit if, as a VC, if, you can be on a consumer-facing product, but know that they have tooling in the back end that could also be, monetized over the long term.
Yeah. So one, I do think we're in a recession, and I want to say that to talk about what's coming in the next few years, right? We're going to see probably some slowdown in gaming investment. However, for the investors here, I do recommend keeping on investing in infrastructure and tooling. The reason is that just like in those early days of free-to-play, infrastructure was very immature, and today there's less than 5 top competitors that can handle live operation, data tracking, ad analytics, right? And it's the big guys. Unity, Microsoft is yours, AWS. Basically, every single mobile game developer is using the same partners. Today in Web3, that's absolutely not the case. There's 1,000 solutions, and to be honest, most of them are pretty bad, right? Because including us, everybody's building from the ground up. And so in the next 3 to 5 years, I do expect we're going to see this industry mature, and we're going to see those 5 big players that are going to capture 80% of developers worldwide in terms of tooling. So keep investing in infrastructure, because that's going to also bring great content to players and to our communities.
Yeah, David, I definitely want to give you the chance if you have anything to add to that.
Well, I concur completely with you, Jeremy. I think tooling for Web3 is the missing link. If you just think about the transition we're going through right now, when a game enters into Web3, it unlocks the possibility for the player to become the legal owner of all the game assets they acquire. And that is a actually fundamental shift in gaming, right? Because historically, that was never the case. Now, gaming is one of the largest spending categories in entertainment, actually the largest. So imagine what happens, and we have this data now. We've onboarded 5 studios. The latest one, Aria Canada, has 3 million monthly players. They're entering Web3 using our tooling, our infrastructure. Now, we are seeing 2 to 3x increases in the revenue per daily active user when there's the on-chain integration. Why is that happening? It's because the players understand that they are becoming both the legal owner of this asset, and because the asset is infused with a token, they receive loyalty staking rewards just by buying stuff in the games. That's financed by the ecosystem itself. That removes the cost, by the way, from the developer. So the net effect is these are meaningful value propositions, not to mention interoperability between games, where the attribution to that asset is now on-chain. These never could happen before in gaming. These are tremendous network effects. And as one of the largest spending categories in the world, when you start to increase that even more, The publishers are excited to enter Web3. They just want to make money. That's all they actually care about. That's it. They have no sentimental attachment to distributed anything. They just want more money. And in this case, that's what they're getting. So for all of us in this sort of tooling infrastructure sector, we're super excited because we're selling the picks and shovels essentially to all the gold miners, and there's a lot of gold to be had in this transition to Web3.
Totally. And on that, David, like talking about gold, right, is so much of this is the value of the tokens that individual games have. How can developers get tokenomics right, and how does Ready Games enable that?
That's a great question. So our belief is that there's a market for a common currency across video games, meaning a common token. We have created a token called Aura, and Aura is designed to be fractionalized and shared across all the game publishers. It's essentially designed to be white labeled into the games to create the tokenomics for the publisher so that they themselves don't have to issue their own token. Think of it like the euro in the European Union. It's a common currency across markets. The benefit to players is that when they acquire the token through their gameplay, the value of that token is not correlated to the success of that one game. It's correlated to the success of all the games and all the actions on the ecosystem. So we believe the future in gaming is more around shared tokens, in the same way that all of you as investors in venture funds might appreciate sometimes why you invest in a venture fund. You don't want everything to just be single investments necessarily. You want to be in a pooled fund where the value of your asset is about the value of the whole pool. A shared ecosystem token across games creates the same thing for the player. It's essentially like a venture fund for the players. Their token rewards are attributed to the value of all of the games on the ecosystem over time. We as an ecosystem then have a responsibility to make sure the games are well designed, the tokenomics are sensible. But if we do that, the token should accrue meaningful value for everybody. And so that's an innovation in tokenomics. We don't see a future of individual games with their own token, except for the rarest of cases. There'll be outliers. It'll continue to happen. And we say to some publishers, come on Ready, experiment with our token, and if at the end of that you have great KPIs and you still want to go and issue your own token, you can do it, and you can still work with us. But 9 out of 10, or maybe 99 out of 100 publishers will opt not to do that. It's just too much friction for them.
Totally, totally. So on that, Urvit, I want to shift gears a bit. So what's Polygon's take on the metaverse, and how do you think gaming will bridge the gap to mass adoption for Web3?
Yeah, I think it's a pretty loaded question, right? The word metaverse, it means something different to everybody, and you know, I guess I'll say from my personal experience and background, right? I'm more focused on the metaverse plays that are really focused on gaming. I find it hard to believe that you know, hundreds of millions of people will enter a digital space that isn't effectively some sort of gamified space in the first place. So, you know, even today, when you think about the Robloxes, Minecrafts, Fortnites of the world, they're, you know, starting to bridge that into like what a metaverse could be, and they're all games first, and then brands come in, IPs come in, and you know, make it more of a place to hang out, right, where folks are hanging out. And so at Polygon, right, we really think about it from a games first angle when we think about metaverses. So, kind of.
Got it. And so I want to start with you, Jeremy, on this, and then I want to hear from the rest of the team here. So just for this room here, Jeremy, what are Web3 gaming, or just web in general, Web3 fads or trends that investors and gamers alike should look out for?
Yeah, going back to Metaverse, I'm not a big Metaverse fan, let's just say that. I don't believe it's coming anytime soon. Even Roblox and Fortnite are not Metaverses, they're just social games, like they've existed for a decade. I don't believe that the Metaverse fad is going to, you know, continue. There's fantastic products in the space, like Sandbox. I think it's an amazing experience. They can allow a lot of things, but is it a metaverse that connects disparate experiences with different art styles and rules, and, you know, where I'm able to like buy something, then play it in another game? Probably not. So Metaverse, I would say doubtful. Complex tokenomics games, you know, we've seen, I remember earlier this year we saw like token raises, like pure token. Today it's not a viable business model, and the reason is that, well, balancing tokens and balancing token mix is effing hard. Like, balancing a game is fucking hard. Balancing multiple games using the same token, good luck to you. And so those two things I think are going to, like, you know, stay in 2022. But two trends for next year, we're back to basics, right? It's like what business can be profitable in the near future without an intense amount of capital being burnt on it. And one is going to be great teams and great content, like a fantastic Web 2 console free-to-play developers that can create wonderful Web 3 experiences. That's the basic. And the second thing is back to what I was saying. It's like, what are the tools and infrastructure that are going to support those teams? So really fairly basic bets on my end.
Got it. David?
I think in the end, what will drive a lot of the Web3 adoption is the experience of the player getting a level of benefit that they hadn't gotten before. And it has nothing to do with the metaverse or anything like that. It does have to do with ownership of assets. And then with the ownership, the realization that letting those assets potentially go in between games creates even more value to the ownership, which for the first time will give an economic reason for publishers to maybe allow some of this to happen. And why would they do it? It's because if those assets have more value to the player, they can sell them for more money. And in the end, a rising tide lifts all boats. And so I think that is going to be a very important driver, just the experience of players becoming owners and the benefits that they may legitimately get. And that has nothing to do with like some new visual metaphor like a 3D metaverse. We don't need that to drive Web3 adoption, I think.
And Urvit?
Yeah, I agree, I think, with everything that's been said. I think the other angle to Metaverse where, we at Polygon are focused on as well is we're bringing a lot of brands into Web3, with folks like Reddit, Starbucks, Instagram, right? And so once again, it actually comes back to kind of the thesis of we think games will actually onboard tens, hundreds of millions of users to blockchain, but we as a platform have to provide value to those game developers. And once you get a great game on chain, right, or you get a great game out there, your second order problem is user acquisition. And so from our standpoint at Polygon is how do we onboard more wallets for our gaming partners to be able to access them and acquire them in their games and great experiences. And so I think that's the other piece as you think about, hey, how do we onboard, tens and millions of users is you have to get these wallets in people's hands, and there's many ways to do it. It's not just via one single vertical or vehicle.
Got it. And with that, we will wrap up. Here at CTH Group, we pride ourselves in sharing knowledge, and I want to thank our wonderful panelists for coming here and sharing all your knowledge with us. Thank you so much.